Hey traders, welcome to Investing Confidential. As you could probably recognize in the back, I'm in Paris. Got the Louvre right here. Fairly crowded today for a morning. Hey, I wanted to comment just on this. A lot of talk about this Fed pivot. I think the Fed will pivot, but the timing is just way off. The Fed's not going to pivot for quite some time. All the indicators are that underlying inflation is still very high. We're seeing, certain things as we discussed. Inflation has peaked, but it certainly is not going to come down to this 2% or anywhere close to the 2% target on the Fed. Goldman has, or in most of the consensus, at the end of the year, 6%. This is what I think it's going to be, 5-6% by the end of the year into the first quarter. Everyone's saying, okay, maybe you'll get close to 2% by the end of 2023. It's not going to be possible. But the bottom line is the market's rallying on Fed pivot, and it shouldn't be, because there will be no Fed pivot in the short term. In fact, given where we think the terminal rate's going to be, this is the rate where the Fed has to stop, or at least neutral. We're looking at 4.5%, close to 5%. Fed's got a long way to go. The indication or the expectation is 50 basis points in the next meeting. I wouldn't be surprised that an expectation goes to 75, and as we get closer to that time and it goes 75, all these gains will be given up. The problem is that inflation is sticky. So when one indicator comes down, the next thing it comes up. So we've had gasoline prices being artificially driven down by the White House decision to empty the strategic oil reserves, and they're going to continue to do that. They're despite the fact that they said they're going to stop buying oil back, I think they may even accelerate. They're depleting those reserves. Once those reserves are depleted to a point, not going to be able to do it anymore, gasoline is going to go right back up again. So whether it's OPEC or whether it's the depleting of the oil reserves, gasoline prices continue to fluctuate. They'll come down artificially, but then they go right back up again. We've seen lumber prices, all these. Now we're seeing used car prices plummet. We're seeing new car inventories rise. Why? Because people are overloaded now with semiconductor inventories. I think I spoke about this a few videos ago. Have been rising. They're at, I don't know, maybe decade high. So that's good for consumers who want to buy appliances and cars, but certainly not good for the car companies who've been gouging people with artificial price increases. And yes, those price increases were artificial. By the end of the year, the auto companies will be begging you to take their cars. So if you have patience, just wait for the end of the year specials. There'll be plenty of those. So a lot of things are positive on the pricing inflation front, but there's a lot of things that are sticky. So this pivot in the short term will not happen. This rally will fade. There are so many things happening around the world outside of the U.S. That's a major problem on the inflation front. I'm here in Paris. The energy costs here are, the expectations are that to go through the roof. They will not, because temporarily you have the nuclear power plants across all of France. And by the way, France is about 80% nuclear, one of the cleanest countries in terms of energy and one of the most soundest energy. They're all in maintenance right now. So they'll be back online by the winter time. But for now, there's expectations of higher energy prices, and they're not going that high. So France is in pretty good shape. UK, as I mentioned before, is in a really bad shape. We've talked about it before. Their energy prices are already up 80% over the last month. So they got big issues, and the rest of Europe, Germany's even worse. But the governments are going to step in and subsidize. So at the end of the day, it's not going to be as dramatic as out there. But inflation will be high and will be sticky here in Europe, and that's going to continue. So again, Fed pivot, not going to happen. The dollar will still be strong. The dollar is going to continue to hurt all assets around the world, currencies and assets, whether it's stocks, whether it's bonds, whether it's other currencies. So that's not going to change. And we're seeing indicators from everywhere that inflation is sticky, and there is no Fed pivot. So that's the bottom line today, that despite this movement higher, it's only short term. The Fed's not going to pivot anytime soon. They will pivot at some point, and then we're going to have another false rally. But by that time, we're going to be in deep recession. and we're going to be in an earnings recession too. So earnings recession is coming. Next week, we begin earnings season. We've already seen some indicators that we spoke about way before the indicators began about Apple. We're going to see these problems across the board in the technology sector. Any companies that export are going to have real currency issues, but more importantly, it's also consumer demand across the board around the world is plummeted. Okay, Europe, consumer confidence is down at almost a 20-year low. China, the consumers basically stopped, and the rest of Asia, it's just limited. So you're going to have demand problem along with currency translations. The second quarter numbers, which are coming in, are going to be okay, but the guidances are going to be terrible. So watch for the guidance when these numbers come in across the board. We're going to see, no matter what industry, very weak guidance, which is going to take the market another leg lower. So there's a lot of landmines, as I said before, especially coming from Europe. I'm here in Europe now, and though places like Paris are bustling, London was bustling, the overall consumer demand for goods that are imported from outside is, especially large price goods, is very weak because the economies are weak. The other thing that's reversing is the jobs, right? So we've had this whole thing about the labor markets are very tight, blah, blah, blah. Well, I never believed it. I don't think it's correct. And now the labor markets are plummeting. There's the job openings have mysteriously just plummeted over the last couple of weeks. I never believed in this whole idea of there were 3 jobs for one person. It's all about a bunk. Again, a lot of statistics that were wrong, the way it's been calculated to create some narrative. And now you're seeing an incredible waterfall down of the amount of job openings. So we're going to have unemployment figures that are going to get worse. We're going to have job opening figures that are going to plummeted. So again, on the job front, another negative indicator for the economy. So here in Paris, things are not good, except the food, except the drink. But as far as the Fed pivot, don't believe it. So traders, happy trading.